In the next 8 minutes, I'm going to explain exactly how an IUL can be properly structured to protect you, your family, and your retirement without having to take any market risks and be able to pull out at any time tax free. So let's jump right in. My name is Max. I work with Founders Insurance as a licensed broker. I'm going to show you step by step exactly how it works, and if it feels like the right fit, we can talk about next steps later. All right, so the first thing I want to go over is what is an IUL? So to put it simply, an IUL is a life insurance policy. Yes, it is life insurance, but it builds cash value like an investment. For example, like a 401k or Roth IRA. However, it has none of the risk of losing money when the market drops. Now, IULs are offered by the following carriers, many more. You've probably heard of companies like Mutual of Omaha, Aflac, Ethos, F&G, National Life Group, all these great companies. So as a licensed brokers, we work with these companies to be able to offer the best product at the best monthly contribution, structured in a way to protect your retirement. So IULs, first of all, IUL stands for Indexed Universal Life Insurance. In an IUL policy, there's two parts. The first part is your death benefit, which is what your family gets, God forbid something happens to you, and a second part that builds cash value. So I'm going to go in depth on each one of those. First thing is the death benefit. Now, for example, let's say that you're covered for $300,000. That $300,000 death benefit under the IUL policy will pay out to whoever you select as beneficiary. So it's typically out of 100%. So if you want to put 5 people, 10 people on there at 10% each, that's up to you. If you want to put one person, you give them 100% of the beneficiary. Okay, so that would be a tax-free check, 300 grand. Let's say, God forbid, something happens to you. Tomorrow, this $300,000 check would go to your beneficiaries within a few business days. So that's the death benefit explained. The next thing is the actual policy benefits. So there's a couple of policy benefits under it. The big two are the fact that there are living benefits and immediate coverage. So for example, if you're diagnosed with a chronic disease, terminal disease, chronic illness, maybe cancer, stroke, etc., you'll be able to tap into the actual death benefit to pay your bills each and every month. So for example, this is a National Life Group illustration here for someone in their 50s who is putting in roughly about $1,000 a month, which is a max funded IUL. So for example, if they're covered for $500,000 and they happen to catch a chronic illness or terminal illness, or they become extremely ill, they'll be able to pull $7,258 per month out of the actual death benefit to pay their bills each and every month. So not only is there immediate coverage, but there's actual benefits while you're still alive. Of course, that's if you get really sick. Okay, so the next part about it is the actual cash value. Now, the cash value is super duper simple. I want to explain it in a way that makes sense. So let's say you're putting $1,000 a month. That's what we call a max funded IUL. Now, you can put anywhere from about $100 a month to $200 to $500, all the way upwards of $1,000 a month. Now, the way that it works is that there's two parts to that $1,000 monthly contribution. Part of that $1,000 is going into your actual life insurance, like the death benefit, living benefits, immediate coverage, and everything else under the policy. The other part of that $1,000 each and every month is going into cash value, which is growth annually in terms of interest earned on your money, your cash. Okay, and as the policy owner, you're in control of how much of your personal monthly contribution goes into each part of the policy. So for example, if you want to have a maximum cash value policy with a minimum death benefit, then most of this $1,000 is going to go into your cash value. There has to be both parts no matter what, but even if you wanted a minimum cash value policy, meaning minimal cash value, but a maximum death benefit, then you can do that too. So as a licensed broker, we're able to structure this properly based on your needs and what you need for your retirement or for your family. Okay? Now, the other part of cash value is the actual market risk protection. So I got two examples here, like a 401k and an IUL. So for example, let's say you got $10,000 in a 401k. That $10,000 that you have in your 401k, if the markets, let's say they're down 20% that year, your $10,000 automatically turns into $8,000. However, if you have $10,000 of cash value built in your IUL and the markets go down 20%, you stay at $10,000 because your principal is protected in the policy. And the way that it works is that there's a floor and a ceiling. Now, the IUL has a floor of 0%, meaning if the markets go into the negatives or they go into the red, your money, your cash value never goes under 0%, meaning that 10,000, even if the markets are down 10, 20%, it's going to stay at 10,000. But when it comes to a ceiling, the maximum that you can make on your money annually is about 12% per year, which is a very strong return because it's still linked to the markets. It's just, for example, if the markets are up 20%, you get your 12. If the markets are up 12%, you still get your 12. If they're up 8 or 9%, it matches it at 8 or 9%. Okay? Now, the 401k doesn't have a floor or a ceiling. So God forbid, let's say you're 64 years old, about to retire at 65, and the markets go down 20%. At that point, your retirement looks completely different. So definitely something to consider. Last part about it is the tax-free benefits. So for example, in a 401k, it's going to be tax withdrawals up until a certain age, usually 59 and a half, where you have to pay a massive tax penalty and then pay taxes again on that income that's going to be reported if you decide to pull out of your 401k. So even if you saved $1 million in a 401k, you'd still have to pay about 25% income tax to the IRS. So you only have about $750,000 left to spend. But if you have $1 million of cash value in this example, of course, and you borrowed against it tax-free, you have that entire $1 million available to use. So the best part about this is that it's tax-free. You never have to pay taxes on it because the money that you put into it is already taxed. Now, qualifying for an IUL, it's simple, it's quick, there's no med exam. It's a very transparent, crystal clear process where we take you through a couple of our insurance carriers that offer the best products for what you're looking for. Now, that's an IUL explained in a way that's easy to understand. If you have further questions or want to learn more about it, book a call with us using one of the links below, and we'll be happy to help out.